It's time for the big conversations, telling stories of movers and shakers, of industry giants and daring professionals. It's time for the conversations that change your perspective on life, the kind of conversations that shape entrepreneurs and move careers forward. If you don't know where these conversations are found, we are sending you a GPS. But if you're listening to this voice right now, you are here. Welcome to the Growth Podcast. This is the GPS.
Welcome back to the Growth Podcast. Yet another exciting edition. This is our first episode for the month of February. It's a month of love, but we're taking a different twist this time around because you can't show love if you have no money. So this week on the podcast, we're talking about money. And by money, we're talking about investments. We'll be exploring different investment options that are available for you, regardless of what your age is or your station in society. That is our conversation today. And I do hope that you do have a pen and paper because this one is going to be very deep. My guest this week is from Zisk Life, and she is the head of treasury and investments there, Madam Kunda Musonda Chola. Most of you who follow me on Facebook, you've seen her before. So now she's here for a more detailed conversation on investments. Welcome to the Growth Podcast.
Thank you so much, Soilanji. Nice to see you in this new year.
Yeah, good to see you. Happy New Year, by the way.
Happy New Year.
Yeah. Let's first start with, an introduction of who you are. Tell us about your professional background. How long have you been with Zisk Life? What does your job entail? So people can, appreciate you further.
Okay. Thank you so much. And as introduced, my name is Kunda Musonda Chola, Mrs. Chola. And I've been with Zisk Life for a long time. I think it's almost 20 years. Yeah, I started my career with Zimmerstead Insurance Corporation then. And I started in the finance department. So basically, I have an accounting background. So from being in the finance department, I think I touched in all areas in the department. And then I was quick to be moved to the investments department. And this happened at the time that Zisk Life was restructured. So I've been with the investments department, I think a little bit over 12 years now. And in terms of investment management, of course, we restrict our discussion to general. We're not talking about Zisk Life. In this case, we're not talking about their investments, but basically just the general perspective to investment. So in terms of investments, there are various investment asset classes, and beginning with property, because property is also an investment asset class. There's property, there's government securities, which are split into the government bonds and treasury bills. And then you also find some corporate entities who issue bonds, in this case, who are borrowing from the public. And they come through an asset class we call corporate bonds. And then you've got some other entities who issue commercial paper, meaning they borrow money, but they issue a commercial paper. And so entities or individuals alike can actually invest in such an asset class. And then we also have equities. These are stocks, or perhaps maybe we call it shares in companies. And these shares have a trading platform, such as the Lusaka Stock Exchange. So you find that the companies that issue shares, they bring their shares to the stock market, and then entities and individuals alike can actually participate and buy shares in a company through a trading platform which is available.
All right.
Yes.
You mentioned real estate, and in the past there have been these debates about, building a house. People have certain reservations about building a house. It's not really a business and whatnot. What advice would you give to those who are thinking of venturing into real estate? Because there's like commercial real estate and there's residential real estate.
Yes.
Most Zambians are into, built, flats for rent and whatnot. Do you feel that's a viable investment? And also, how do you make it viable, and why do others feel it's not viable?
Okay, so property investment or real estate, like as you put it, yes, it comes in different forms. There's the commercial properties and residential. So I think for starters, one has to know or have an objective of investing. Do you want to invest your money for 3 months? Are you investing for 1 year? Are you investing for a lifetime? Or are you investing for a purpose? let's say, for instance, you could have maybe a child that is in secondary school but will be pursuing tertiary education. So would you want to keep cash in your account to wait until they go to college? That's when you pay up, or would rather invest that money into an investment vehicle? So in terms of real estate, what I can say is that it is a viable investment in the sense that it's one of the investments that actually, I would say maybe inflation indexed, because you find that if you look at the property market and when it comes to rental chargings, you find that some landlords actually pricing every year. They're increasing their rent based on the inflation changes. And they're also increasing their rent based on the improvements that they've made to their property. So I think in terms of real estate, it's a whole talk that you could have around real estate investments. And it depends on what type of investment you want to go into. If you're going to look at maybe commercial side, then you have to obviously provide a property that will speak to the needs in your area, because you're just not going to invest in a property just because it is a property. You have to look at the demographics around that property. And maybe you also look at the maybe competition, like what type of property are you buying into? How does it present itself? How does it compete with the other? Because you know that there are properties which you can buy into a property which is maybe an already existing property, or maybe you refurbish it, or you could start from the ground, build a property. And so there are all those variables which attribute to different types of properties. But in terms of whether someone would want to invest in a residential or commercial, I think it all depends on the objective of investing.
All right. Our broader discussion today is basically around, I think, bonds and treasury bills. There are a number of questions that I put together. These questions were generated by, people from, past discussions on this topic.
Okay.
I think most of them have not been addressed, but I figured this would be a good platform for us to address them. Okay. So number one, and I'd like this conversation to be as basic as possible, so that people across, different levels of education can still comprehend and, have an understanding at the end of the day. Treasury bills and bonds, government bonds. Let's start from, first of all, drawing a distinction. How do these two differ?
Okay. For bonds and treasury bills, they vary in terms of, first of all, their tenures. In this case, 10 years, I'll speak to the lifespan of that bond or treasury bill. So for treasury bills, they are short-term in nature, and they mature within 1 year. If we take, for instance, our market, we've got treasury bills which are issued for 90 days, meaning you invest in a treasury bill for 90 days. When it matures, you get your money. Or you can invest in 60 days. When the treasury bill matures, then you get your money. In terms of the maturity, apart from the 90 days, we've got the 273 days, and then you've also got the 364 days, which is 1 year. So you can actually invest in, you're not really restricted to what type of tenure you want to invest in, but of course it speaks to the objective which I spoke about. Do you want to invest for 1 year or a shorter term? So you find that these are the differences that exist between the treasury bills and the bonds. For the government bonds, they are medium to long term. You find that the government bonds, I think for the purpose of a market, you have 2-year bonds, you've got 3-year bonds, got 5 years, 7, 10, 15, and think they can extend even beyond 15 years. So that's one of the differences. And then the other difference is that the treasury bill does not pay a coupon or does not pay interest immediately. But for the bonds, it pays interest every 6 months. So when you're invested in a government bond, let's say for 2 years, you will get your interest or a coupon every 6 months until that bond matures.
What's the interest at the moment?
Well, they vary. We've got 2 years, 3 years. So each bond issue, each tenure has a different interest rate. But they begin from 9%, 10, 14, and
these you mentioned, the bonds are longer term, so they run for a duration of how long? What's the maximum duration on the bond?
I think this market has seen the longest bond of 20 years. But right now we've got 15-year bond issues.
15-year bond.
Yes, so meaning if you're investing in a 15-year bond from today, then that bond will mature in 15 years' time. So that's a long-term bond.
All right. And so if, for example, I invest, let's say I invest 50,000 kwacha, okay, for 2 years, the interest for 2 years is what? 9%.
9%.
9%. So it means I get 9% of 50,000 every 6 months.
No, 9% is an annual interest. So it's 9% for the year.
9% for the
Yes,
year.
so meaning you annualize that interest. So every 6 months you'll be getting half of that 9%.
Oh, so,
which is
so
basically-
it's 6 months. So it means
Yes.
9% for the year.
Yes.
So it means you get 4.5% after 6 months.
After 6 months.
Okay.
On the
for
50,000.
2 years.
Yes.
So the money you get out at the end of the 2 years is your 50,000 plus those 9% you're getting.
Meaning
That's it.
you'll have gotten the interest along the way. But at maturity, there's also an interest which is due at the point of maturity.
And how is that calculated?
That's on the face value, the 50,000.
Okay.
Yes.
I'm saying the interest, that's the 9% on the
The
50,000.
9% on the 50. Yes.
Okay.
So which you obtain, would say 9% is what you get at the end of the year. But every 6 months you're getting almost like 4.5%
Okay.
due to you.
And then others ask to say, if I don't want that money to be coming to me, I want it to be going back into the bond. Can that be done?
Well, in this case, the issuer, which is a central bank, does not automatically do that for you because that interest is paid right into your account.
Okay, so you
Yes.
have to instruct your bank or whatever
You
it
have
is
to instruct
that-
your bank if they have to take it back into their bond.
Okay. Run me through the process of how do I even begin? Let's start with the basics.
Okay.
Here I am, I want to invest in a bond. Where do I begin?
Okay, for individuals, we've got like maybe through the commercial banks, they have the customer relationship managers who you are, in talks with, and then you could actually, you could be advised if you want to invest whether in a treasury bill or a bond, depending on what money you have. So, because you need to have an account for you to trade in those securities, you need to have what they call a CSD account, which is a Central Securities Depository. So you have to have that account created. But you could actually apply for it from the Bank of Zambia. Once you have applied and you've got it in place, then you give an instruction to your commercial bank to actually purchase your security on your behalf.
Okay. So that the bank is one way. What's the other way?
The other way, well, in our market, we've got the collective investment schemes, whereby if you subscribe, then you could actually give them an instruction to buy those securities on your behalf. So they will be trading on your behalf. So even that question you asked whether you could actually roll back the interest, if you've given them that instruction, they could actually do that for you.
Okay, so like I said earlier, I've got a number of questions. So someone was asking, how do I know which one is right for me? I think you mentioned in part that, it depends on what you're,
Depends on your objective.
Your objective.
What is it that you're investing for? Why are you investing? How much are you investing? Then it tells you which way to go. If you want to invest for a 1 year period, then you have these options that you can use, which mature within the year. If you want to invest for a longer term, then you have the option of going into the government bonds, which are longer in terms of the maturity period.
Okay. What is some key information that people should have? And I've seen this, that most people rush into making investments.
Okay.
What should I know? Whether it's treasury bills, it's bonds, it's investing in whatever investment it is. What is it that an individual has to know before they, put their money into something?
Okay, maybe speaking for an individual, I think the first thing that should come to your mind is how secure is that investment that you're looking at? What's the cost of going into that investment? And obviously, then even the maturity period itself should be known to you. Because supposing you're keeping money for someone, then you say, let me invest for a while, make some money, make a quick buck, maybe, get the profit. And then if you're not sure how that investment works, then it becomes difficult for you. So those are the basics that you should know. At what cost, the security, and the tenure.
All right. There's a question. Does inflation affect bond earnings?
In a way, yes. Okay, if you look at it from the point of the coupons that you receive or interest that you receive, because if inflation is going up, so it means it does affect the lifetime value of money.
Yeah.
Because the money you're going to have today definitely has more buying power than the money you're going to receive after maybe 2 or 3 years. So in a situation where inflation is rising, yes, it does affect the bond yield.
All right. Next question was asking, someone was saying in today's world, the most common way to purchase these is government securities, mutual funds. When you invest in mutual funds, you need to pay an expense ratio. What's the primary purpose of paying the expense ratio, and how does it benefit an individual? Maybe also just explain what are mutual funds.
Okay, so in terms of mutual funds, just to put it in a simple way, these are forms of investments that are done collectively. So you find that as Swilange, you may have a 50,000, like you said. Then someone else has a 10,000. Then someone else has a 2,000. But collectively, if your money put together cannot buy into, for instance, a minimum amount required for a bond, then those monies could actually be collected, put together, and then invested to buy one bond. So in terms of the mutual fund or what is available in our market, like the collective investment schemes, they actually collect those monies and invest on your behalf. So you find that there will be more than one person, maybe 10 people who have bought into one bond. And I think that's where now we bring in the aspect of the expense ratio. Because someone else is doing that investment on your behalf, they have to be paid for administering that investment. So the expense ratio is a cost on running that investment, because they will be doing it on your behalf. They will be monitoring it. And in terms of any disbursements, when that asset matures or bond matures, they have to do the administration of, actually splitting that money in whichever amount of pot that invested. So all that comes up with a cost. And the cost of doing that, it comes through the expense ratio.
All right. So do the people who are in, the mutual fund arrangement, do they have to know each other?
Well,
because you mentioned I've got 10,000, I've got 2,000,
yes.
5,000. Do we have to know each other? Or the person that's administering that is the one that, brings us together without us knowing each other?
Yeah. Okay, the person administering that obviously knows who is party to that.
Yeah.
But as an individual, it's also necessary to know who else is in that pool. Yes, so it is also necessary to know.
Okay.
Yes.
And are there mutual funds where you with other people from like other countries?
Yes, except, our conversation is restricted to the Zambian platform, right?
Yeah.
But in other jurisdictions, you could actually invest. Even Sui, where you're seated here, you could actually have invested your funds somewhere else in a mutual fund, which is outside the Zambian borders, yes.
All right. The other question says, economies are volatile. What's the risk factor of losing out with treasury bills and bonds?
Well, speaking for our market, there's no losing out completely, because these are risk-free investments. And you're assured of getting a payment at the end of the life of the bond or treasury bill. So there's no losing out.
There's no losing out.
There's no losing out. You will get your money.
All right. Are there any challenges one can face, for instance, when government has a financial crisis and the only option the government has is to increase tax? Does the increase affect the bonds already in existence?
Well, I don't think so, because when you've already invested in a bond, if there's a tax attributed to that, should be withholding tax on income. So if there are any changes, unless there's a change to the regime, to the tax regime, yes, that's affected. But for something that is already issued, there's no effect.
There's no impact.
There's no impact on that.
Which one is more profitable, buying bonds on the primary or secondary market?
Okay, in terms of profitability, well, buying from the primary market, of course, is the best, because you are going in at a price where you bid, because there's a bid price attached to what amount you're going to place in that bond or treasury bill. So the cost is actually lower than going into the secondary market, because when you're buying off the secondary market, maybe to put it this way, you bought a bond, maybe a 10-year bond, right, like 3 years ago, and then you want to sell it off to someone who wants to get into the bond market, like at this particular time. So in the price that you're selling that bond, you have to factor in maybe the coupon which is due, depending on when you're selling off that bond. So remember, there's a coupon which is due every 6 months. So depending on when you are selling that bond, there could be a coupon which is already in the pipeline for the holder of that bond. So at the point of selling, they could actually factor in the cost of that bond, and the person who's picking it up in the secondary market has to pay for that.
All right.
So
for the
it's
sake
cheaper.
of those who may not understand, what's the difference, the primary and the secondary market?
Okay, for primary market, it's the first, like a bond is being issued for the first time. So we call that a primary market. Let's say you have a bond issued today, for instance. This is 2nd February, right?
Yeah.
So Ilanji comes to the market, you buy into that bond. So that's a primary market because it's being issued for the first time. And then the same bond which is issued today can be sold maybe 2 years down the line. Then the person buying into that bond is buying in the secondary market because you're not buying it from the primary issue. So secondary market is like, maybe for lack of a better term, second-hand car.
Yeah.
So this primary is like buying the car in the showroom.
Yeah,
and
so
then
basically buying the bond from someone who bought it already.
Exactly. It's
And how
already
easy
existing.
is it to participate in the primary market?
Well, as I said, it is easy because you go through your commercial banks and they're the ones that run the process for you, they bid, and then that's how you get into the
Okay,
market.
so
It is easy.
Okay, so you tell them I want to bid at this price, and then they go and bid for you.
Well, if you have the knowledge, you could actually dictate the price. But I think there are experts who are able to actually determine what price, because it's not just at any price that you dream of.
Okay, how guaranteed is it that your bid will be accepted, and what are some of the reasons that lead to unsuccessful bids on the primary market?
Okay, in terms of the primary market and the success of every bid, like I said, it's something to do with the pricing, because pricing and also the size of offer, like what. Let's say, for instance, the central bank is looking for 1 million kwacha, right? To raise 1 million. And then you have several investors who participate. They push in their bid. They want to buy bonds, but maybe the bids are in excess of that 1 million. So you find that then the central bank will determine or will have a cap of what price they're going to issue. So if your bid price falls outside the range which the central bank is willing to buy that bond, then definitely your bid would be unsuccessful.
Okay. Next question. When you're buying a government bond from the secondary market, are the terms stipulated, say the tenure and the period that is left for maturity?
Yes, because that bond will have been in existence, right?
Yeah.
Let's say I give an example of a 15-year bond issued today. Then 5 years down the line, someone wants to buy into that bond. So the tenure they will be left with is the 10 years left to maturity. So they're not going to begin counting the 15 years from the time that they buy the bond. They'll be left with the tenure. And of course, the coupons and everything that is attributable to that bond is what they're buying into.
Okay.
Yes.
How do they determine the price that they're selling? So, for example, if I bought a bond and I want to sell it, like you said, second hand,
Yes.
and I want to sell it to you, what determines how much I can sell it to you at? Does, for example, the Bank of Zambia regulate, parameters to avoid exploitation? Or can just say I bought it. I just dream a figure and I say I'm selling it at this figure.
Okay. Do you want me to speak on behalf of Bank of Zambia?
No, I'm asking, does the Bank of Zambia regulate that? Is there are there regulations for that? Or it's up to you as an individual to just, sell it at whatever you want to sell it at?
Well, of course, the prices are regulated because, someone just can't dream up a figure. So I think what guides the pricing is what's existing. And of course, as you can imagine, even if someone is selling a bond in the secondary market, the primary market is also active. So depending on who's buying that bond in the secondary market, they would compare what's, currently running in the primary and secondary and see whether effectively they could buy into that at that price. So I think there are a lot of factors surrounding that, but definitely there's a mechanism in which that price is worked out. It's not just like, dreaming up, it's not done in such a way.
And then earlier you mentioned the CSD account. This question was asking, if you already have a CSD account and you want to buy another bond, do you have to open another CSD account or use the same one?
Well, in this case, if you have a CSD account, you still use the same one. It's like having a bank account, right? it doesn't matter whether it's Mr. Mulenga paying you or Mr. Banda. You don't have to create several accounts for several, sources. Yeah. So you use the same CSD account.
And the CSD account is created for you by your central bank? I mean, by your bank?
Like I said, if you don't have the ability to do that, perhaps maybe the bank or relationship manager could actually help you through the process of opening that account. But the form is supposed to be filled in by the person that is opening the account.
Okay. On average, how long does it take?
Except I'm not sure what parameters would affect that, but it shouldn't take long. As far as I know, if the information is correct and submitted to the Bank of Zambia, I don't think it's something that can take long.
All right. And then this question says, if you want to invest in a 1-year bond, says for 1,000 kwacha. Yeah. But before so if you want to invest in a 1-year bond for a particular amount of money, but before the 1 year elapses, you want to increase the investment. Is that allowed?
Okay, so in this case, we're talking about a treasury bill because our market offers treasury bills which run for 1 year.
Yeah.
So that person wants to know if they've, let's say, bought a treasury bill for 1 year.
Yes.
They have 1,000. And then along the way they get money, they want to buy into the same one.
Yeah.
So at that point, I don't think it's possible in the treasury bill market because you'll be just getting into a different issue. You can buy into a different issue, not necessarily topping up on what you've already bought. Because like I explained, the prices change. So the price at which you bought it perhaps maybe a month ago will not necessarily be the same as at the time that you have more money and want to push up the investment value. So for a treasury bill, that is not possible.
For a bond, is it possible?
For a bond, in terms of the government bonds, we have what they call benchmark bonds in the market, where a bond could have been issued 3-4 years ago. Then the central bank opens it up. So when they open up, then you're able to buy into an already existing bond.
All right.
Yeah.
Can one use bonds as collateral to borrow money from a bank?
I can't confirm for individuals, but I could speak for maybe institutions. They're able to use their bonds as collateral. So in this case, they will be pledging those bonds against what they would want to borrow from a commercial bank.
All right. What are the chances of having your application for a bond turned down? You want to buy a bond and turn you down. Refuse.
Well, I think I mentioned earlier, I think when it comes to maybe the pricing, so if you're really outside the price, then definitely your application can be turned down.
Okay. Is it possible to automatically make an agreement with the bank to be reinvesting the money on your behalf in case you forget? So like I said earlier, where... someone, that interest that is coming to the bank, you know what, I may forget at the 6 month, time interval. So whatever money comes in, just put it back. Can you instruct a bank like that?
Well, I'm not sure maybe what sort of agreements exist with banks or maybe different banks, but I believe that instruction can be given so that they could actually roll back. But it also depends on the amount. Like I said, there are minimums and, so if there's a minimum required amount, and the interest amount which flows through your account is not adequate, then I don't think that would be possible. But I think possibilities are there that an instruction can be given for that.
Okay. And then someone says, considering a change in the MPR, which is the monetary policy rate, does that affect the bond yield or its value?
Okay. In terms of the MPR, what happens, I would maybe cite an example, right? Yeah. So the changes in the MPR then does affect the borrowing. Let's say, for instance, for commercial banks, if the MPR is reducing, that means the borrowing rate is reduced, right? So then the commercial banks would actually borrow money cheaply. And then when they have surplus money, so meaning there's more liquidity, they would take that money into the bond market to buy bonds. So thereby they create a demand for the bonds, right? So if there's more demand for the bonds, what happens is that it pushes the price up, and which ultimately can affect the yield, because it's like, the concept of demand and supply. So if there's too much money, the bond yields could actually go down. But if there's low supply, little money, then the yields could go up. So then it attracts people to rush in with their money.
All right. Is it possible to purchase bonds in Forex? If not, how can you hedge against Forex loss at the maturity of the bond?
Okay, is that question from the Zambian market?
Yeah, these are Zambian.
Okay, so in terms of our market, because the bonds are issued in the local currency, so one can only purchase in the local currency, Kwacha currency. Unless you're speaking about other bonds, like corporate bonds, because a corporate bond can be issued maybe in a different currency other than the Kwacha. And then in that case, then yes, it's possible for someone to buy into a corporate bond in a foreign currency.
All right. Is it profitable? Is this profitable for, say, someone buying bonds, for example, at the minimum? Because some people feel like for me to, buy a bond, I should have 100,000 kwacha, 500,000 kwacha. That's when you feel the actual benefit. For someone who buys a bond at the minimum value, is it profitable for them?
Well, I would say a profit is relative, I think, like you've put it. So a minimum amount, let's say someone buys a bond with 5,000. If that bond is yielding 10%, so even the person that buys a bond for 100,000 will only get 10%. So in terms of that relationship, I think the profit is relative to how much someone buys into. And they don't have to wait until they've got 100,000 to be able to buy into a bond.
All right. Next question says, how do you put back and buy more wealth while the bond is still running?
Okay, so meaning if you get your coupon from the bond, you're getting interest every 6 months, right?
Yeah.
And then buying into the bond. Well, there are other assets that someone can buy into. If they choose not to go back into the bond, they could get their interest. They could buy into maybe equities, like buying shares, or they could maybe convert, or maybe sometimes you want to accumulate your interest. You could place that money into a fixed term deposit, which also gives you an interest. So whilst you're waiting for that bond to mature, you could actually accumulate your interest, place it into fixed term deposits, it accrues interest, and then maybe you build it up to a certain level, then you can push it back into a bond with a different tenure, if you like.
All right. Next question says, is it a must that you have to show the means of your earnings when requesting for a bond? That's also fine.
Well, I think our market, institutions are now quite strict in terms of what sort of funds are flowing through even the accounts. I mean, there are issues of anti-money laundering, there's cybercrime, there's, So I think the institutions actually do their own checks in terms of the KYCs. They have to know who their client is, their source of monies. So I think it is important in a way that, they have to know where your source of income is coming from.
Sounds like this person's going to share your money. And then the other question says, can an individual buy a part of a bond through Lusaka Stock Exchange without having a CSD account?
An individual, I think, as Ella mentioned, you have to have a CSD account for them to trade, unless you're going through a different platform, like maybe a collective investment scheme, where it's not you actually participating, but they're pulling your funds together. So maybe that entity running the CIS or the mutual fund could have their own account where all these individual monies or funds are being channeled through.
All right. The coupon rate. Someone's asking more explanation on the coupon rate, which the interest end at the end of the bond contract. Do you end the interest every month, or it's an overall interest at the end of the bond contract? I think you mentioned every 6 months, right?
Yes, every 6 months, but to put it in a way of layman understanding, because once you buy the bond, so the interest starts accruing from that day onwards. So meaning you're earning that interest, except you're only getting it at the end of 6 months or at the end of 1 year. But so the interest does accrue. But you're not going to just get up and maybe 2 months down the line, oh, let me get my interest. No, you can't do that because it's structured in such a way that you get the interest at 6 months and every 6 months thereafter.
All right, great. I like this question. Is it wise to obtain a loan and invest in bonds? You go and get a loan and get that loan money and go and put it in a bond.
Okay. So first of all, where are you getting that loan from? Are you getting that loan from a loan shark? Are you getting it from a structured institution? So, but most importantly is at what cost are you getting that loan? If you're obtaining a loan with a very low interest, and then you compare it with the interest that the bond is offering you, if the interest on the bond is higher than the interest that you have to pay on your loan, then definitely, why not? So you could actually get a loan and then invest it in the bond, especially in the long-term view. Yeah, you could actually invest because you get more money in the long-term view than short-term, because you're not going to get a loan for, let's say, 1 year, where you're required to pay your loan at the end of 1 year, and then you have placed in a bond that maybe is going to pay over time. So it also depends on the tenure of that loan, the cost of that loan. Then you match against each other, and then you decide.
Talking about loans in general, why do you think most Zambians have this fear for loans?
The fear for loans, I think it goes with someone's appetite or what sort of risks they're able to, depending on what risk they're able to take up. So I think for the loans that are well structured, I think people should not fear to go into that space. But I think the fear comes in with the loans which are not really structured. Like you don't know when someone is going to call for that loan to be paid back. Or maybe you have an interest rate that you're not even sure of. Maybe you have an interest which changes every other day. So you have all those parameters that people look at before they could actually get into, buying a loan or something like that.
Yeah, I think some people just fear loans because that thing, what if I get fired?
Well, but there has to be some insulation. There's, when you get a loan, there's, other institutions do ask you to actually pay a premium on insurance, so that they're also secured that in case you leave your job and you don't have any means, then they'll fall back on the insurance. And of course, there's also the security aspect. Like sometimes you get a loan and then they ask you to back it up with some form of security. So different phases anyway of looking at loans.
All right. What happens if you forget you bought a bond on the day of the Bank of Zambia paying? Do they automatically reinvest everything or they'll deposit in your account? I think you addressed this partially, right?
Yeah, like when your bond matures, by opening that CS account, you would have provided your bank accounts. So immediately it's due, or even when the interest is due, it goes to your account. It's paid directly into your account.
What happens when someone changes banks? Like I've changed banks.
Well, you have to notify them. You have to notify them, but unless you're saying the bank is completely closed. But definitely, it's a financial system, so it's got systems. Maybe to definitely revert back, and then you claim it at a later time.
All right. Since we're talking about investment, and you're an investment, expert. In the recent past, we've seen these issues of village banking, going wrong, people running away with money and whatnot. What are your thoughts generally on village banking? Because at the end of the day, we have a lot of people who are in these village banks.
Yes.
And for some, it's working, others it's not working, others have been disappointed once and they just said, what, I'll never do this again. What should someone do to make sure that they do not fall victim to village banking schemes?
Okay. I think, first of all, for starters, the village banking concept is a concept that came and was embraced very well. And in terms of maybe individuals participating, first of all, I think they have to know who is in that village banking. Because village banking groups have been formed premised on trust, mere trust, because people put their monies together. They don't even ask for someone to provide any security or even maybe any reference or something like that. So it's that trust, at least, which has, I think it's a trust which people have taken advantage of, and then they run away with people's monies. But I think going forward, with all these experiences and what people know now, I think it's important to know the circle of who is in the village banking. It's also important to know the source of the money, because sometimes you find that some village banking groups just regroup. Maybe they don't even know where someone is bringing money. Someone brings in maybe a 2 million kwacha. Do you know where that 2 million kwacha is coming from? So, not to really put it in that way, but you find that some individuals could be using the village banking to, some money laundering activities. So I think it's quite necessary to know who is in the circle of the members of the village banking groups.
All right. And earlier, I think I asked you about understanding investments before you go into them. Could you tell some telltale signs? Like, what are some red flags I should look out for to say, this investment, think twice about it?
Okay. So every investment has to be, structured. You have to know what cost is in there. You have to know or understand the return. And, of course, you have to know then the tenure of that. How long is that investment running? Is it an investment? Someone comes up to you and say, okay, listen, if you invest 1,000 kwacha today, you're going to have 10,000 kwacha by Friday. So you have to understand what sort of investment is, what is the underlying aspect under this investment. So you have to know all those issues, and you also have to know who you're investing in, because it's not just a question of saying, someone has come and then there's this investment, then let me run for it. Because some investments may be very attractive, but you don't know what is underlying. So you have to have an understanding of what sort of investment you're going into.
Okay.
And the objective of you investing in that particular asset. What is it that you want to get out of that?
Okay. Generally, where do people go for investment advice? Generally, I know that some people, because some people don't even have a contact with their bank. You just have a normal bank account, prestige banking.
Yes.
You don't have access to financial advice and whatnot. And you notice that the majority of those that are scammed are the average citizen, who may not even have access to maybe people like you to ask for. How do people arm themselves with financial information?
Well, they say information is power. So people have to explore more before they jump onto anything, because I think I would say, I don't know, it's a culture thing in Zambia, because sometimes someone would be presented with a certain prospect, but because they feel, okay, I'm looking at this prospect, or 2 weeks down the line, I'm going to make 100,000. I won't go to Swilanji to maybe find out anything, or even maybe hint him out, no, I want to, because you just want to mushroom, like from somebody like, I've made this big bucks without even finding out. So I think maybe it's a cultural thing that people would not want to maybe explore more, or even maybe make inquiries beyond what they've been told. So I think it's important that people, explore, get information, and before they make any decision, at least they have even that sort of prospect that comes to a table. There ought to be some references of some sort, because there's no always just going to walk into your path and say, okay, listen, I've got this prospect, or jump on board without maybe doing. So you have to have your own due diligence around whatever prospects that comes your way, no matter how much it is, no matter how little, because it's a little that goes a long way.
Sometimes I feel like it's just people's selfishness. A thing where you feel if I tell her about it, then interest is actually part of
Exactly. That's what I'm talking about. Myself. So you want to have the lion's share before you even know that lion's share could be nothing. So it's selfishness. But in terms of information, I think there's a lot of information in our market, and people should just maybe go out there and find the right information before they jump onto some of these prospects. Okay. All right.
Well, thank you very much for your time. I feel like now the information is a bit more out there.
Okay.
It's a very technical, complex subject that most people don't, understand. And I feel like, because I've seen some times where the Bank of Zambia says no without under subscription,
Oh, yes.
Because I think the majority don't understand. And I always tell people, if you don't understand, don't invest.
Okay.
Because I've seen where people go on Facebook and label a company, because you didn't understand how it works.
Exactly.
And mostly the fine print people don't want to read.
They don't want to read.
Just about
Exactly.
Yeah. So otherwise, thank you very much.
Okay. But with platforms such as yours, I'm sure you have a wider audience, and people come through for questions. And so I believe you should be a contact maybe for some of these institutions, like on a form, in a formal way that you could actually engage and, give out more information, as much information as can be made available to the individuals.
Yeah, and I feel like we have a more financially savvy generation, if I should push like that. Because I think our parents and our grandparents, like treasury bills.
Yeah.
I never heard about those things 10 years ago. Not because they're not there, but because they just didn't fancy them.
Exactly.
But now, if you go there, you find the young people who are investing and whatnot.
Yeah.
And people are investing for their children's university and education.
The grandchildren.
So, and that's why I feel like we need the information now more than ever, because there's a lot that's going into it.
A lot
because that thing, like you said, whether you've invested in a bond for 10 years, then after 2 years you got pressure, I want to get your money back, but you didn't understand the investment. So those kind of things.
But that's why they exist. You could actually, we'd say, like with bonds, you call them liquid, because at any one time that you feel you need to get your money back, you're able to sell and get your money back.
Yeah,
that's why they exist.
Yeah, so anyway, that's the case. But then also when I say that, I mean generally, for example, in terms of, because even like life insurance, for example, you're paying for your child's education for 20 years. That's the thing you're putting in. After 3 years, you go and say, I want the money back. Then they charge you a penalty. Then you say, no, those guys, they're thieves. They want, but it's because you didn't understand.
True.
So yeah, there's that also. But thank you very much for the time.
Okay.
Yeah.
Thank you.
I know you're on LinkedIn, right?
Yes, I am.
So if people want to reach out to you, they can ask you a question in the inbox.
Yes.
And you can respond.
Can do that.
And that's Kunda Musonda Chola.
Yes, please.
All right, thank you for your time.
Thank you so much, Wilanji. Though short notice, but had to come through.